All right, Mac, Gary, Al, what's going on, guys?
We're
Hey,
live,
guys.
baby.
We're live.
All right.
Nice.
Welcome
Thank you
back.
for the
Welcome.
opportunity.
Yeah, absolutely, and welcome to another episode of That Mortgage Show. Today we are blessed and graced by Mac Ross and Gary Ross of Ross Felty. Do you guys want to start off by just kind of giving us a quick elevator pitch or quick, hey, how you doing? Introduce yourselves and tell us like what you do, where you serve. Really concise.
Yeah. Well, I'll start,
All
Dad. So my name is Mac Ross. I'm a real estate attorney here at Ross Felty. I'm actually the managing attorney. It's myself and my law partner, Kyle Felty. A lot of people in Jupiter probably know Kyle. I got into this firm in 2019 and been doing residential, commercial, real estate law, closings, title work, leasing, development work since since 2017 when I graduated law school, but joined up with Kyle and started got it and took control of the firm in 2023. So, and a little bit after that is when I brought my dad along, and he's got a different background than I do. He's not an attorney, which he tells everybody. Make sure he tells everybody that, but he's he's a paralegal of ours, and I brought him on to help in business development, which he's really thriving in. I'll let him tell you kind of a little more about that.
Yeah. So again, I have to. I'm Gary Ross. I'm Mac's dad, and usually the first thing I say when I introduce myself, my son is the Ross in Ross Felty. I am not the attorney. I do have my degree as a paralegal, got from Boston University, but that was only because Mac wanted me to come on board with him, and I thought, well, I should bring some credentials with me, right? Because basically my background is in sales, and I've sold heavy building materials, concrete block, steel, concrete pavers, and did that for over 36 years. Within that time frame, though, the company I was working for said, hey, we noticed that you do a lot of training and you attend a lot of training. Would you like to be our national sales trainer? And I said, sure, I'll do that. So I started doing that in 2012, retired there in 2018, opened up my own sales and leadership training company in 2018, which I still have. I still have a few clients that I service. But then Mac ended up having this great opportunity with Kyle and said, hey, Dad, you know what? The thing that we want to be known for is bringing value to our clients, not just, handling closings and contracts, but bringing some value to our clients. And I think, providing sales training for the realtors would be a great value add. And I agreed with him, and I said, sure, let's do it. So that's how I got tagged along in the organization. And I'm new to the real estate industry, but I'm loving every minute of it. And we are doing a program next Tuesday, which is entitled Understanding Your Client's Buying Style. And we appreciate Adam and his organization sponsoring it. And we're looking forward. We got about 30 people registered right now, so it's going to be a full house, and we're excited.
Yep.
Yeah, it's great.
People are coming out in droves to see you, Gary. It's not surprising from what I hear.
Well, I think that aside from just handing your referral partner's business, sales training is probably the next best thing to as far as a value add goes. We Gary, you and I kind of like for a second talked about this at your office last week, but in our industry, mortgage, real estate, it's easy for us folks to kind of forget that this is a sales job. We want to service people. We want to do right by everybody. We have a fiduciary responsibility, of course, but you have to gain trust. You have to gain clients, whether it be from referrals or going out and just capturing business out in the street or wherever you get it. It's sales. So I think that's a huge, huge value add. So good on you guys and very smart. And I don't know if you touched on this, but part of the genius is it's accredited.
Yes.
So it's like it's a double whammy.
Realtors will receive 2 hours of continuing education credits.
Yeah. it's been and this kind of been a work in progress. We've been my dad and I have been talking about rolling something out like this for, it's probably been over a year where we've really been planning this and trying to find the right time. And we always thought, let's get some kind of accreditation to add, that helps obviously attract realtors that are going to get some education credits so they can keep their continuing education up. And, hopefully this is one of many that we're going to keep on doing. I've hosted some other events. You've seen, like, you come to the Tuesday events. Mm-hmm. Those aren't mine events. I kind of just provide the venue for it. But any way we can, we're always selling ourselves, and that's that cliche. But, we're always out there trying to innovate and find ways that we're not just saying, hey, realtors, hey, bring me your deals. I want to do your title work. I want to do your residential. I want to do your commercial stuff. It's how do we also, provide some kind of value to them.
Yeah. Which is so much easier to get business from somebody where you can offer something up front, right? If you can offer them some sort of value, you don't have to necessarily ask for anything. They're going to want to work with you just because, you're somebody who can add value other than, hey, I can do your title work, right? So...
Well, there are a lot of options out there. There are a lot of title companies, and of course, there's a lot of other real estate attorneys. And we take pride in being more sort of like that boutique law firm where you're actually talking to my son Mac. He's leading the charge on these, and we have people that have been with the organization for quite a while, and it's more it's not like you're in a big mix and you send the contract and you're wondering, okay, where did it go? Mm-hmm. There's constant communication. And the thing that we take pride in is when we run into an issue, we work on resolving it. We just don't call the realtor back and say, hey, you got an issue, you need to resolve this. We lead the charge in that. So we find that separates us from the pack. And again, offering services like sales training. We also support realtors. We provide attendance at their open houses or their brokers' opens. We bring food and refreshment for them as well. So we're an active part. We're out there. We're out there in the community, and we want people to realize that, hey, we're more than just a law firm.
And that's straight from the director of business development.
There you go. Look at that. See, isn't he
Man,
good?
that's great.
I told you he was good.
He's good. He's
that
really
was
good.
Great. Off the cuff there. Didn't even have to look at the notes.
He doesn't know how to do email, but he can talk for days.
He's got a teleprompter going. So
probably you end up forgetting it.
Cue cards. Got cue cards in the back.
So, all right, fellas. So let's dive into some of the content here. We'll rip through it. Sometimes Al gives me a hard time. He's not a numbers and graphs guy. I like to get into the statistics and into the weeds. But so Al, tell him what's the first segment. We start off every show with this segment.
Every single time. What's your rate? Because that's the first question everybody asks when they talk to us is, what's your rate? What's your rate? So
we call our first segment, what's your rate? So we take a quick look at what might be affecting mortgage rates. And then kind of like a practical, this is kind of where the rates are. So today's a big day as far as mortgage rates go. Really, it's a big day in name only because, well, we'll get into why. Today is a Federal Reserve meeting, FOMC meeting. They are getting together to have one of their, I believe they meet 8 times a year. It's one of their limited meetings where they are actually making a policy decision as it pertains to the federal funds rate. This is the rate that it's a rate at which banks lend each other money. They lower that rate. It should trickle down to the consumer. They raise it, same theory. Well, they're getting together and they're not going to do anything. That's kind of what is expected. I think there's a 99.9% chance that they're not going to touch it. They're not going to raise it. They're not going to lower it. They're going to keep it right where it is. So we don't expect much movement on our end. In fact, that statement, if it hasn't already happened, it's happening right now. They were meeting at 2:00. So we don't expect any change, and we don't expect to see any movement in rate this week. Really, no. I can't put my finger on anything that's going to change rates anytime soon in a big way. No. But Al, what do you got for us as far as the average average rate right now?
Yeah. So right now I think we're looking at 30-year fix, looking at about a 6.8 conventional. And that's pretty much the standard industry rate right there. Again, hasn't really changed over the past couple weeks, at least not anything significant. And I don't anticipate any changes. I think Jerome Powell said he's going to need to see some significant movement as far as, inflation and employment. And then we did see a little bit of cooling in inflation and the employment data. It looked like it was trending towards the numbers they're looking for to make a cut, but I don't think it's going to be enough either. So I think we're pretty much going to hold steady. Probably see rates somewhere in the, in a conventional loan in the high sixes, and on your government, your VA, FHA, USDA, you're probably looking in the low to mid sixes. So,
yeah. So guys, I guess this is more of a question for Mac. The rate doesn't really matter. I mean, it matters less in your area. What I mean by your area is like the Jupiter area. What percentage of your closings would you, if you had to like throw a number out there, what percentage of your closings are cash?
We still are doing a lot of cash. A majority of stuff that we do is cash, and part of it's the market we're in. We're in Jupiter, near the inlet, near the water. It's a high end market, so a lot of our clientele is high end, and there's a lot of cash out there. I have seen a spike, at least in our practice, of lending deals recently. And those are typically anywhere from 300, 350 up to 800. What we've seen. If you start getting into the million plus, I mean, there's some people that do want to leverage, even though they've got cash. They'll leverage and pull out a jumbo loan if they can, if they've got a good relationship with the bank. Or good relationship with a lender that they can work with. But I would say right now, probably 90-10 cash to loan.
It's so insane. I mean,
it's crazy.
And
especially the fact that you see the lending on the, I mean, it makes sense, right? We understand why, but for the folks that don't understand the industry, they would think, well, why the hell are people that are buying over $1 million paying in cash, but the people that are buying between $300,000 and $800,000 are buying, financing a loan? Right. And that's because it's affordability. It's the people that are buying $1 million+ homes have the cash to buy $1 million+ homes. Right. Yep. So.
And a lot of people in this area, they're selling their house in Connecticut that they lived in for 30 years. They're cashing out. Yep. That thing, they bought it for $75,000 in 1983, and it's worth $1 million up in Connecticut now, or $1 or $2 million, and they're coming down here. Yep. There's a lot of that. But it blows me away, the amount of cash people throw around down here. But that's one of my biggest battles. It really is. Like, at some point, though, I would think that the rates will get to a point where a financial advisor or a savvy, person that has a ton of money would think there's more value in leaving it in the stock market or leaving it in CDs or whatever at guaranteed interest versus paying cash. Like, there's got to be a balance. There's got to be a rate, or at least maybe that's what I tell myself to help me sleep at night and thinking I'm going to get some of this business one day.
Yeah. It wasn't always like that for our firm either. I mean, I joined in late 2019. So, right before all the craziness hit the fan with, COVID. But I can recall in third, fourth quarter of 2019 doing much more loan deals. I would probably be closer to 60-40 or even 50-50. We were doing some cash. So for every cash deal we had a loan deal come in, and we were dealing with different institutional lenders, your Bank of Americas, your Truists, and obviously we do work with other loan brokers and mortgage brokers and loan originators. But it wasn't always like that. And I don't know. And the rates back then were obviously much lower, but so the cost of capital was much lower back then. But it wasn't always like that. So I think you're right, Adam. I think there's going to be a point, and I don't know what it is, and I'm not as in tune with the rates as you guys are, but where it makes sense to borrow more, or now it's at a rate where I can, it's palatable to
I hope it's not 2.5% that requires that. Because that's never coming back.
You wait for a long time.
Yeah. The magic number I always hear is 5, but I don't know. You guys
Yeah.
tell me that's the magic number I hear. And hey, when it gets to 5, I'm jumping back in.
That's what they say, but who knows?
And then it's like, oh man, it's coming down. Let's hold off until 4.5.
Yeah.
So that's a big part of the problem. A lot of people, the problem, and then nationwide would be inventory, and inventory is stuck because so many people have lower interest rates. But in our next segment, we're going to get into a little bit about the market, take a look at a headline as far as inventory goes. So I'm going to do a screen share real quick. We'll look at this headline, and I'm going to talk about it. I want to get you guys' take here. So U.S. housing market, is it becoming a buyer-friendly market? So don't take it from me. Take it from Realtor.com senior economist Joel Brenner told Fox Business that now is a good time for buyers to enter the market. He believes the housing market is transitioning from a seller's market to a balanced one with increased inventory, more price reductions, longer time on market, lower listing prices compared to last year, all contributing to a more buyer-friendly market. We're also seeing inventory grow. According to the data, the numbers of homes actively for sale has grown for the 16th straight month, increasing 27.5% in February compared to the same period a year ago. The number of homes sold, including houses under contract, increased by 18.2% compared to last year, and homes spent about a week longer on market year over year as compared to last year. So I know I don't expect, Gary and Mac, I don't expect you guys to know too much about what's going on as far as time on market and stuff like that, like a realtor would. But I don't know. Do you have any insight as to whether or not maybe you're privy to the amount of transactions that have seller concessions on them? I don't know. Do you guys have anything to input on that piece?
I think his report has got some basis in fact. I do see the supply is starting to build up, right? It's the economic supply versus demand. The supply is getting more, but the flip side of that, I don't know what market that guy's in. Looks like maybe he's DC or something, but in Florida, the sellers aren't willing to budge on their prices still. That's what we've seen, and we've seen it since late 22. I mean, that worked 2021, early 2022. It was name your price, but and some of it's come down. But I mean, I think definitely the supply is increased out there. So there's more homes out there, and there's more competition for sellers are competing against other homes that are for sale. But a lot of them still aren't willing to, move their price to an adequate price where a buyer wants to make offers. So you're seeing the ones that are priced right will go. But
I think that's exactly right. It's like, and so our primary market, obviously mine is here in Florida, and then me and Al are from Maryland. So Al does a lot of business in Maryland. I'm in Maryland, and it's funny the difference between the markets. But the one common factor would be if it's a desirable home, there's still a lot of demand for it. We're not in a market where people are throwing up their junker and getting $30,000 over asking anymore. But if it's a well-kept, desirable home, there is a taste for it or a want for it.
Yeah.
This morning I was at a breakfast with several realtors, and they are recognizing that, yes, this is now a buyer's market. We're not approaching we are in a buyer's market. Unfortunately, like Max says, the sellers tend to not understand that. And we are starting to see, of course, there is much more inventory out there. Days on market are much longer than they were before. So we're starting to see some sellers, just making price concessions, lowering the price. So it's beginning to happen in some cases. I was with a broker just this morning at their Brokers Open, and the house had been sitting on the market since December. A beautiful home, but just not in the price range people were willing to pay for it, and the seller was very reluctant to come off that number. And fortunately, as of today, the broker says yes, we were able to negotiate for a price concession. So it's here. The realtors know it, I know it, and lenders know it. But it's, the sellers are still thinking that they can get what they want to get.
Right. And
Right.
and they have an emotional attachment and stuff, and that's
Sure.
why you got to hire a good team to have those tough conversations.
Yeah.
And
Yeah.
Gary, it's funny. One of my favorite things that you've said the last 2 times I've been down the office is that you were potentially looking to kind of have a role where you're helping out Mac as much as possible, but also you're semi-retired. But like, he's got you out here hustling, beating the streets at open houses.
Right.
Yeah,
Got to put them to work, right? It's all part of the job. That was in the fine print, Gary.
I didn't have a good attorney reading the contract, I guess. But no, you know what? People say, when are you going to quit? When are you going to quit? And I just turned 71, and I'm going to quit when I die. I mean, I just can't see not doing anything. And the opportunity to work with my son is a blessing. I mean, I know there are a lot of people that wish they could have this type of opportunity, and for some reason they can't. So I'm very blessed. I love it. I'm going to do it as long as I possibly can, and that's probably until, the day they put me under. So I'm enjoying it. I'm enjoying learning about the industry. Every day I learn something, several things new. And one thing I've come to find within this industry, there's a great deal of concern and help that you get from other parts of the industry. I see where lenders are working together with agents to help them move their properties. There's just a lot, and other agents working with other agents. It's really a great deal of working together, and that's really enjoyable to be in that environment.
Yeah.
Mm-hmm. Yeah, it's a great point. And I love what you said about working with your son. I tried that. My son's about 3 years old, so it didn't work out quite as well. Maybe I'll get to that point where it's going to get we'll have a little bit better working relationship. My fingers are crossed, Gary. But yeah, that is very true. When you're working with a team that's dedicated to getting the job done and doing it in a high level, right? It makes it so much easier, as opposed to, we've all worked with folks where you call 3 or 4 times, you send emails, you don't get a response for a couple of days. And it's like, we're in this together. Everybody's fighting for the same goal. We all want to get this deal across the finish line, right? So it's nice to have folks that are as committed as you are, right, to getting it done.
It is super important. It's really important for everybody to realize that and not let egos get in the way, which can happen. So we'll move on to another bit of information, and then we'll wrap up with just kind of chatting and having an open conversation. So one bit of news I wanted to bring up that's happening in our industry is there's some mergers and acquisitions happening. And Gary, you've been in business for a long time. Maybe when we're done the segment, you can give us your insight on how what happens when businesses come together and merge. But we had two developments last week that are newsworthy. So one, Rocket Companies is set to acquire Redfin. Rocket Companies announced plans to acquire Redfin for $1.75 billion, aiming to streamline the home buying process by integrating mortgage and real estate services. Experts say it could enhance convenience, but may lead to higher costs for buyers. The other merger is between the real estate group Compass Homes is in talks to acquire Home Services of America. It's Berkshire Hathaway, Warren Buffett's Berkshire Hathaway Realty Group. So these two mergers really could reshape things a little bit. I think that the Rocket Redfin it has more potential to reshape the way business is done. You got a lender buying a like Redfin is just another Zillow.com. So a lender acquiring one of those behemoths, it's really like a bug light, it's just like a big glowing magnet for home buyers and home sellers. Right. And I think the biggest, if not the second biggest lender in the world is going to acquire them. So I know what I think when I hear something like that. And Rocket Mortgage, formerly known as Quicken Loans, what do you guys, Al? What do you think? And then we'll get Mac.
Yeah, so I hate it. I'm not a fan of it. Adam said I'm not allowed to be negative, so I'm going to stop it there.
I got to tell them that all the time. Like, you can't. You just like, people don't want to hear you say hate at all.
That's true. I dislike it. Just having this one-stop shop for everything. You go to one place and you get your, you find your house, you get your mortgage, you get your homeowner's insurance, you get your title work done all in the same place, right? You buy your furniture, you get your deli meat, you do it all, right? So I think it kind of creates an issue. But I mean, I get it and I understand it, but I'm not a big fan of it. I'd rather see things separated and, the availability. I mean, I'm sure you obviously for compliance reasons have the availability to shop elsewhere, but you're going to create a monopoly and you're going to create, this bug light where once you suck somebody in, it's like the convenience of you can get all these different things in one place. And then what's that going to do to the rest of the industry if you can get a significant discount on all of that? Or is it going to drive prices up, for everybody else? So it's going to be interesting to kind of see where that goes.
What do you fellas think? What do you think of the like conglomeration of the world?
we deal with it kind of on a smaller scale here with a lot of affiliate companies. A lot of brokerages have affiliate title companies, or a lot of they'll have affiliate mortgage companies. Builders have
right.
You got builders they buy the land, they build the house, they sell it. They have their own sales team, they have their own title company, they have their own lender. It's all under one roof, and it's couched in this concept of that's helped the consumer. It's going to be so great for the consumer, but what do you lose in that? I mean, I think you lose. I think you lose personal touch. I think you lose service. I think you lose. The things that people take for granted sometimes and don't realize it. It's like, I just want to close. A lot of people want convenience, and it'd be great to go online to Redfin and just click on a house and go straight over to Rocket, get my mortgage. I could buy it from my couch, but did I really get a service? Did I get educated on what I'm buying? Did I get educated on the loan I'm getting? That's why I think it's an interesting industry that hopefully it never gets fully taken over by technology. Technology can play such a great role and help the industry, right? But I still think you need people like us, people like you, Adam, Al, my dad, that are there to pick up a phone. We're not an 800 number that then you have to go through 8,000 different buttons to press or say representative 50 times to get to somebody.
Right.
And a lot of people are like, yeah, whatever, service schmervis. But
until you need somebody.
Yeah, until you need somebody.
Until you got a fire to put out, and there's and you're getting thrown around the 1-800. You're exactly right. And that's kind of like the MO of the big company. Like, it's like calling you want to dispute your home your telephone bill. Good luck. You want to call Comcast or Verizon or whoever and talk about get somebody on the shoot. I mean, look at Google. If you have a Google page, you cannot interact with a human to get help. So I think the service, and then complacency. You got a bunch of people who are doing a not so easy job, and if they know that there's another deal coming right behind it because it's this giant behemoth, the tough one, I'm not that I don't. That's a tough conversation. I'll just kick the can down the road. It's much easier to do when you're going to get more. There's no accountability when you're just going to continue to get business because your giant corporation owns all the data.
Right. But also, it's kind of on us to figure out unique ways to get business, right? So we can sit here and we can scream at the sky about it, which I will do for a little while. But then it's like, okay, what are the unique things that I bring to the table that this other giant, organism that does it all, what are they lacking, and what are the areas that I can kind of fill in, right? What's the value add that I have that's going to, help bring this borrower on board as opposed to them staying with, going with Rocket and Redfin and all that. So it's a unique opportunity for us to reevaluate the way that we do things and how we go about our business to be as valuable as possible. Right.
Yeah.
So
that's
I think people, this is the new shiny toy out there, and that's great. But what happens when you do have a problem, and who are you going to call? Who are you going to get? And you might have to make numerous phone calls. Does that mean you're going to have to explain your situation time and time and time again?
Right.
It is but we cannot, just beat that drum. We have to continue to bring value, and that's what we consider ourselves. People of value, that value people, and we continue to bring more value to people. Now, that value word gets kicked around a lot. What do we mean by that? Well, we have to be available. We have to be accessible. We have to be able to solve people's problems, right? And buying a home is the biggest investment they'll probably make, and it's a very scary time. There's a lot of things involved. And being there to help them, to hold their hand, to let them know, hey, we're going to take the fear out of it for you. That's how we counter that. And sure, there are some people that like that convenience. I enjoy that. I bought a new bedroom set, right? I ended up getting everything: the bed, the mattress, the box spring, everything. I ended up looking at Costco. I could have saved a couple grand on a mattress if I would have went there and bought the mattress.
Mm-hmm.
It's kind of the thing like, okay, let's step back. What do you want to achieve in this transaction, and who do you want to achieve it with? Mm-hmm. And the fact that you're talking to a real human that you can go and see eyeball to eyeball, that's pretty powerful, as opposed to that 1-800 number and constantly pushing 0 trying to get a hold of a human.
Right, right, and getting your blood pressure up. So, guys, we're gonna get out of the news. I want to talk a little bit about specifically about the sales training coming up, about DISC. Let me see here. I know. Look at that. I got John C. Maxwell.
All right. Awesome. I was just with Dr. Maxwell this past week. We were together up in Orlando. So
I should have given you my book to get it.
You have his book.
Yeah. Should have gotten the book signed.
Yeah, right. So sales training, it's important. The DISC, can you tell us a little bit about what that is?
Sure.
And just give us a little insight about what that is.
Yeah, well, this came about back in the 1920s. A Swedish psychologist, Dr. William Mortensen, came up with this idea, or not an idea, but this study that, we as people, we possess 4 basic types of personalities. D, which is a dominant style personality, I, which is an influential style, S, which is steady, and C, which is compliant. So that's where you get the acronym DISC, right? And people do things based on their personalities. They think, they do, and they also buy based on their personalities. And what we have to understand, a lot of times you may be having a conversation with someone and you just have that feeling like, man, I'm just not getting through to this person. I'm just not connecting. Chances are you're going in with your personality and it's not really being received well with the person who had a different personality. So what you have to do, especially in the field of sales, because sales, in my opinion, is influence. And in order to influence anybody, you got to first connect with that person. And you're not going to be able to connect with that person unless you understand their personality and morph your personality to better adapt with that person. Once you are able to do that, what you have done is open up the opportunity to connect and sell more. So that's what this course is about. It explains the 4 personalities, the 4 DISC personalities, the buying matrix of those 4 personalities, and how you as a sales professional can connect and with those personalities and be able to make the sale.
So without giving away too much, because you're going to teach the course, we can't walk around giving all of our clients this assessment and figuring out, okay, he's an I, and I'm going to talk to him. So what could you give a tip or a trick for if you're, hey, this is Adam, he's a loan officer, you guys got to connect, and we're at a networking event and I'm connecting on the fly, and
this is great because I'm going to a networking event in a couple of hours, so I am all in here, Gary. What do you got?
Well, you have to look at the characteristics that make that personality. Okay, so I would say, like the dominant personality, that's someone who's strictly focused on the bottom line, very quick with decisions. They're very in charge type person. The person I worked for, he was a very high D. And I knew this because one day I said, hey, Steve, it's lunchtime. Let's go out and grab a sandwich. He says, yeah, I'll drive. And I said, well, Steve, you can't drive. Your car's in the shop. He says, I know, we're going to take your car, but I'm still driving. That's how I know he was a very high D personality. He wants to take charge. Your I personality. Now, before we got on the air here, I was chatting with Alan, and I would bet $1 to a donut hole Alan is an I personality because he reached out to me really quick. Hey, Gary, how are you? Geez, it's great to see you. I mean, that's that I personality. They'll talk to him. I bet, Alan, when you go into an elevator, do you talk to people in the elevator?
Yeah, I get a little squirmy if I don't say something.
That's
can't
the
stop.
I personality, right?
What's Mac?
I would say Mac has a D personality, but he also possesses the I and the C personality. He's a D. He's very outgoing.
I wasn't going to say it.
But he's because of his position, he needs to be in charge. So he's making decisions every day that affect all the people that work for him and those people that don't even work for him, right? So he has that D personality as well, and also C because he's very, very analytical. And though actually having the DIC is a great combination for a leader. So you have to look for those things. Now your C personalities, they tend to be more number driven. They tend to work by themselves. They don't like to be in crowds. They focus, these are the people that talk about warranties and guarantees, and they want to make sure that they have those things. And when you say something like when you say the market is a buyer's market, they're going to say, well, Adam, who says that? Mm-hmm. Where are you getting your information? That's your C personality. And your S personality, the C's and S's are more reserved. D's and I's are more outgoing. D's and C's are more task focused. I's and S's are more people focused. So your S's, they're your friendly people. They make up 69% of the population. They're very friendly. They'll talk to you, but they're very concerned about security. So, they're very concerned about change. They don't like change very much. Mm-hmm. So, you start picking up on these when you're talking to people, what characteristics come through, and then you're better able to connect with that person. Does that make sense?
Makes a ton of sense.
Yeah, and I can see you can tell that you're an expert in the field. So I'm excited to witness you in action.
Yeah,
that's good stuff.
I am a DISC certified instructor. I've been doing it for quite some time. I enjoy it. You'll see more. We'll get more in depth with how you can identify these personalities. But then the next step is, okay, how do I sell to these personalities?
Right.
Because if you go in trying to sell a D personality with an I personality, it ain't going to happen.
Right.
It ain't going to happen.
Gotcha.
Right. And you've got your wizards out there that can just, identify who they are. They have a strategy for it. This guy's going to want to know the numbers. He doesn't want me to make him laugh. He doesn't care about.
Don't joke with him. No small talk. He's going to want to know. Okay, so this house I'm buying for $500,000. In 12 years, what's going to happen to it? Well, research has shown that it's increased in value. 5% every year. So you're going to get an increase. That's the type of conversation you want to have with that person. I'll share that with each personality at the course.
That is added value, and it's happening at the office.
Yes, it's happening at our office, which is 725 North A1A in Jupiter, Florida.
Beautiful
Suite
spot.
C112. So yeah, come by. And with Adam's donation, there's going to be our sponsorship. There's going to be some nice food for everybody, and we'll have a good. It's a very fun, entertaining program that you can walk away with stuff you can actually apply immediately to help drive more sales and connect better with your client.
Cool. All right, fellas, we're getting to 40 minutes. I think when we get around this time, it's hard. It's a lot. It's a big ask for folks, and I know it's heading to 2:40 in the afternoon. I'm sure you guys want to wrap up your days and jump on any business you guys got going on. Mac, do you have anything you want to close with? Anything that you want to share? Anything we didn't talk about?
No, I mean, I really appreciate the opportunity to come on and speak to you guys and be a part of the show. I've seen it before on, following you, Adam, on Instagram. So awesome to be a part of it. And I know I'm a little biased, but I finally got a chance to see my dad speak in front of a big crowd at an Our World event a couple weeks ago, and he's pretty dang good. I know I'm his son. I got a biased opinion, but we're looking forward to this event. Like I said, it's been a few years kind of in the making, and hopefully it's one of many. So thanks.
Yeah, that's fantastic. God, I'm telling you, I was so excited about this too. Obviously, to talk to you, Mac, because you're in the industry, and I just love title work to death. I really do. It's my favorite thing about the business. But I went ahead online and I took a disc. Assessment before our course.
Don't tell them what you are.
Just so I had a little bit of background, right? Just so I was like, I can relate to this guy a little bit, And then I got caught up and took an MBTI as well. I went down a rabbit hole.
Wow.
But I'm just fascinated by it. So.
And then he watched half of a commercial, and
Yeah,
but
that's the way
that's the I personality. I'm an I. We're easily distracted, right? Squirrel. Yeah.
Every time.
Every
time.
So yeah.
So what were you, Al? What was the online disc assessment?
He nailed it. I'm an I, and secondary is a D. Mm-hmm. So, God, you just right off the bat, you knew. Mm-hmm. That doesn't surprise me. You know what I mean? Like you're one of those wizards Adam was talking about.
Well, it also helped the fact my family owned a bar and restaurant, and bartenders are usually very good at identifying personalities. So I had a good basis.
So nice. It's been in your veins for years.
Yeah, it had. I love people. There's no doubt about it, and I want to connect with people. And the best way to do it is understanding their personality, so you can connect with them.
Yeah.
I used to there was a restaurant bar in my family as well, and I attended bar for many years, server, bartender. And Al used to actually come in and visit me and sit at the end of the bar and give me shit all night. So
barkeep. Let me get a beer.
Yeah. They all know his name when he came in.
Oh yeah. But everybody, it was like, Al. God, it's Al again. Get him out of here.
We just want to relax. All right. So, all right, guys. Well, thank you so much for joining us. It's been a pleasure. I appreciate you guys. I appreciate you opening up the office to the group of us that come in once a month. It's a great space. It's a great event. And I can tell some of us linger, and Mac is trying to get back to work, and we're sitting outside of his office talking and eating donuts. And,
that works, man.
But it's a good time. So we appreciate you guys. Thanks so much for coming on, and then everything else you guys do.
Awesome.
Enjoy it. I just like to close. I heard this the other day, and it really makes a lot of sense, especially now with the way the market is, the real estate market. It said, you don't wait to buy real estate. You buy real estate and you wait.
Yeah.
So, we that's the mentality we need to be having as we go out and interact with not only our realtor clients, but also with the general public.
Mm-hmm.
Yeah. I was actually, it's good. It is great. And I was actually driving through Fort Pierce last night. And I'll tell you what, if that isn't the place where you do that. I mean,
that's been a sleeping giant, but it's starting to bubble.
There's nowhere else to go. There's nowhere else for all of this to go, and it's right on the shore, and it's beautiful. It's great old houses that just with some TLC that could be. That's the spot.
Great downtown too. If you ever been downtown, it's got a great downtown spot.
I love it up there.
Yeah.
So
The only other place you can go would be west, Okeechobee or Belglade, but
yeah, we'll have to have you on another time to give us a history lesson on Okeechobee.
Okay.
Could you do that?
Sure.
Sounds great.
All right.
That's awesome. You guys have been fantastic. Thank you so much for coming on. It was such a pleasure.
It was awesome.
Chatting with you and meeting you.
Thanks for having us. Thanks again.
All right,
see you
fellas.
guys.
Have a great rest of your day. We'll talk soon.
Okay.
See you guys.
Bye.
Bye.
Bye.